structure is king. His little queen is liquidity. That was a game changer.
Hello, Mr. Chris. How are you doing today?
Hi, Hamed. Very good, very good. It's a pleasure to be here with you.
It's a pleasure to meet you as well. So, before we start today's session, could you please introduce yourself to our audience?
Yeah, sure. My name is Christian Roman, Chris Roman, and I'm living here in Puerto Rico. It's an island from the Caribbean. I have been trading 2.5, 3 years from now. And I have some bachelor in other thing. My career is in communications, and I have a master degree in business administration, but it's nothing to be about trading and financial markets. And I'm married right now. I have 10 years to marry. I have 33 years old, and that is the overall. Yeah.
All right. So currently, are you a part-time trader or a full-time trader?
I'm a full-time trader, and I have a mentorship academy in the Spanish community.
All right. So what are the pairs or instruments that you are mostly trading right now?
Okay, I like EURUSD, EU, GU, and gold.
All right.
But I start in my beginnings. I start with the indices, US 30, and I start to trade Nasdaq like 6 months with Nasdaq, and then I changed to the forex.
So you started your trading journey around 2.5 to 3 years ago. You initially started with indices, and then you gradually moved on into FX pairs, right? So what was the thought process behind this?
Because the movement, I was with a mentorship program that it was a scalping with Nasdaq, but to win in this game, you have to have a healthy risk and reward, right? So in that trading strategy of scalping strategy, the risk of reward was negative risk of reward. So I was blowing so many accounts with that strategy, and my psychology was totally burned, because the impact of dopamine in your brain was incredible. It's in the 9:30 Open of New York. So it was really crazy. So then I have to in that experience was a impact me so much that I have to change my strategy, my mind, my the markets and overall. So I decided to start to learn some liquidity concepts and smart money concept, and that was a game changer, because my perspective of the market was completely changed when I have to. The most important thing that the people do not know about the market, it's two concepts of all the smart money concept that you can learn and practice, but there are the king and the queen. The king is the structure. Structure is king, and the little queen, his little queen, is liquidity. So that two things are the most important thing that you have to master first, to then pass to the psychology. But first, you have to identify, first of all, the basics things. The king, it was market structure, and then the queen, liquidity. If you master that 2 points, then you have only to worry about your psychology.
All right. So liquidity, structure, psychology. Now talking about liquidity, structure, and psychology, if we simply combine these three things, we get the trading strategy, right? So yeah, we are also interested to know about your trading strategy. So if you could please share your screen and share it with the audience as well.
Yeah, sure. I do my time frames, major principal time frames are daily in 4 hours. I like to see daily a little bit, only to check out the overall tendency. If I have something like this, I pass in 4 hours because my principal time frames are daily 4 hours or 4 hours primary, 15 minutes, and 1 minute. If I don't see anything in 15 minutes, I pass to 1 minute to apply the same thing. It's the same thing, it's mechanical, but in different time frame. Okay. So I have this in 4 hours. Okay, and this is the major thing that I tell you and recently with you guys. Liquidity and structure. Okay, I have two basic rules. After the market break the higher high or the higher low, you have to sweep a liquidity. First of all, we have to see clear the tendency, and second, after the break of structure, I have to see a sweep of liquidity, a sweep of a higher low here. Okay, so sweep of liquidity, a little bit of reaction creating more liquidity, and then break of structure. That is a setup. So what I have to do is wait to the market come back to my point of interest in this example, right? This is my setup here.
All right.
When I erase this. This is my setup. Simple like that. You have to sweep of liquidity. If I have a little bit of reaction here in this point, let me mark here, right? In this zone, a little bit of reaction that makes me more liquidity and break of structure. That's it. Only these 3 steps. What I have to do is only wait till the price come back to my point of interest. If not, I don't have to trade. But let's see, this is a perfect example that we experiment a lot in the market.
All right. So if
if the price sweep of liquidity here, it's my previous liquidity, and don't come back to my point of interest, but they have a little bit of reaction here, right? Look here, a little bit of reaction here. Look at the candle, and then breaks of structure again. Here, this fractal. Now we have a setup here, because it's sweep of liquidity after the reaction break of structure, and now we have here more liquidity. because this order block here have inefficiency, liquidity, reaction, breakup structure. That's it.
All right. So if I simply summarize your trading strategy, it would be kind of like this. At first, you go to the higher time frame, such as 4-hour or a daily time frame, to understand the bias of the market, if it's bullish or bearish. After that, you jump into the lower time frames like 4 hour, 30 minutes, and to understand where the major order blocks or imbalances or the liquidity areas are. Then you look for the possible breakout structures. After a possible breakout structure has been made, like creation of a higher high or creation of a lower low, after that you look for the liquidity grab or sweep. After that liquidity grab has been made and it has actually tapped into the Eurozone, then you go for a possible trade, right?
It's correct. And then I pass to 50 minutes and I only have to wait to my session, okay? Because here it's London. I have this indicator here, and they divide me the kilsons or trading sessions time. This is Asia, this is London in red, and my session is New York session, okay?
All right.
So in London, you see that it type here and sweep liquidity in 15 minutes. So we have to wait the reaction and breakup structure. That's it.
All right.
We have the reaction, we have the breakup structure, and this is the point of entry. Okay. So
is there any other confirmation that you look for before executing a trade, like the DXY index or anything like that?
Here I can see, I have the DXY, and I see the overall tendency of the DXY, not in the later time frames like 1 minute or something like that. Only 4 hours, 15 minutes to see the order flow of the markets, the clear tendency, a clear sweep of liquidity right here. And if I have a clear divergence, that it was to me a plus setup. Okay. I have in my trading setup book, I have if I have a plus setup, I have some risk. If I have a setup, I have some risk. And if I have a B plus setup, I have some particular risk based on a certain amount of confluence.
All right. Okay. All right. So there is no particular time frame that this strategy is basically suited for, because you have to analyze from the higher time frame and then gradually you have to go to the lower time frame, right?
Yeah.
All right.
But it's basically 4 hours, 50 minutes. If I doesn't see anything clearer in 50 minutes, I go to 1 minute to see the order flow, the tendency, the sweep of liquidity of maybe the previous session. And then in 1 minute, I see the order flow clearly, and I wait to sweep of liquidity in 1 minute, and then see the same pattern, breakup structure, inefficiency, boom, maybe 2, 3, 4, 5, 15 minutes trade.
All right. So what's your average stop loss with EU, GU, and gold?
Okay, my average stop loss maybe in EU and GU are from 2.5 to 4 pips if I trade in 1 minute.
Don't you find it really hard to maintain this tiny stop loss in all of your trades?
In all of my trades.
Yeah.
If I trade in 1 minute, that was the
all right. So what
with a gap. Okay, because the candle. Let me see if I have an example here. this is a random example right now. The market is live, okay?
Mm-hmm.
So if I have this in 1 minute, right?
Mm-hmm.
And this is my zone, right? Because they sweep of liquidity, have a reaction, break, and then here, tap out, then sweep again here, right?
Mm-hmm.
And efficiency. So my trading plan, this is my entry point here, right?
All right.
Okay. And I have to put 0.5. So
Now I see.
here my stop loss, a 0.5 of gap under this point.
All right.
So there is that I back this pair a lot in 1 minute. So see how it works?
Mm-hmm.
They sweep it again here. But statistically, and my target in 1 minute was the liquidity, of the market structure and the overall. If I don't see in 15 minutes a liquidity point, I would target the 1 minute liquidity, and that's it. It was a 4.85 risk reward.
All right. So as the market moves really fast in the 1 minute time frame, in which time frame do you execute most of your trades?
To be honest with you,
Mm-hmm.
the 1 minute time frame.
All right. But,
yeah. I like a short term trading style, because the market are fractal.
Mm-hmm.
If you know your bias, I have to wait only for the order flow to sweep off liquidity,
mm-hmm.
make me the setup, the concept, and execute. That's it.
All right. So, so what's the story behind developing this strategy? Like, you started trading 2.5 to 3 years ago, then you started with a little bit indices. So what actually opened your mind to learn this concept and embrace it?
It's made me a lot of sense, you know.
Mm-hmm.
It made me a lot of sense. So when I see this, I was trying all the strategy possible that you to make this with all the possible strategy that you can imagine. All the indicators, or RSI, MACD, EMA, you name it. Supply and demand without liquidity, and it was a message, okay? So when I start with these smart money concept, I know all the little things and the details about the liquidity specifically, and then was a completely game changer to me. Yeah.
All right. So
now I knew the movement, or the reasons of the movement. Yeah.
All right. So I suppose this strategy has been working out for you really great, as you were mostly using this strategy, and you are only using this strategy. So how has been the overall experience with FundedNext using this strategy?
It was really good, because you guys use a raw spread broker. So if I trade in 1 minute, the spread are like in EURUSD, like 0.0. So maybe in the fluctuation of the market, 0.01 of spread. So it was very important to my strategy and my trading style. The other thing is a personal community, a personal account manager. That is you guys are the only platform that have that service. So if you have some trouble or some issue or something with your account, with your payment. You have your personal butler there. Like you only have to, you only have to text him in Telegram, and as soon as possible, he contact you back and resolve the issue. So it was very good to me and very nice service. The other thing that first, when I do you guys review in my YouTube channel, was the design of the platform. It was very friendly, user friendly, modern, French. So now you're implementing a community into the platform outside Discord. So this is very good to me. So that division of the company, and I found you guys when you guys was starting, so maybe the first month of your launching the platform, and I see all this, the professional thing, the branding, the marketing, the vision of the company, of the customer service priority, and the serious, of making happen to put this company in top of the funded profit firm.
Thanks, man. Thank you so much for your kind words. And when we started this company back in 2022, so we had one mission, one goal, one vision in our lives, that we want to change lives. So yeah, that's what we are here for, and that's what we have been trying to do. We have launched the MP5 servers last week. We have also allowed news trading in evaluation accounts, and hopefully we're going to launch a new package tomorrow as well. So stay tuned. And I also had a couple of other questions for you. I'm sorry, as for the sequence and everything. Yeah, you can carry on.
Don't worry. Other thing that it was a game changer to me was a 15% profit split. That is so cool, because you have to pass all this effort, all this time, and you can get a 15% of share in your evaluation or in your Express account after you have to pass to receive the money. So the 15% profit split, it's a psychology and a motivation to getting up and do the right thing. So that's very cool.
All right. So as you have been trading with FundedNext for a while now, so what has been your average risk-reward ratio with the platform?
My average is 1 to 3. That is 1 to 3 is like the minimum that I have is 2.5 and 1 to 2.5 to 1 to 5. All right. But my gold standard is I put my stop loss and 1 to 3 risk reward, basic structure. Okay. If the trade is 3.3, excellent. If the trade is 4, best. If 1 to 5, more best. But basic structure.
All right. So what's your winning percentage in FundedNext?
My winning percentage is it varies in the month, but maybe 65% of win rate.
That's impressive. That's pretty impressive.
Yeah, I month 55, 60, 65. That's the range, to 55 to 65. 65.
All right. So what's the biggest
a terrible month? A terrible month was 40-45%. But that's an excellent month. Like I was the complete elite champion of the world for me. It was 70%.
All right. 70% is crazy.
One month only that happens. So, but it's not the standard. So it's not the standard. It's not the reality. So 55 to 65%. And 1 to 3 risk reward. That's the common.
in this market, we're all to make profits, right? So at the end of the day, even if the winning percentage is like kind of 30%, but still you are making profits, still you are getting payouts. That works as well. And I also one last question: what's the biggest profit you made on a single trade with FundedNext?
In a single trade with FundedNext, single trade. In a single trade, it was 2,225.
All right, with a single trade.
Yeah, in a single trade, and we have to make the split. That was the overall trade. It was a 1 to 4.25 something, risking a 0.5% of account.
That's pretty good. That's pretty amazing.
Yeah, because in risk management, now we have to talk about risk management, right? Yeah. In risk management, my risk management it was so conservative. I only trade one trade a day. That is a standard rule to me. One trade a day, that's it. If I lost, I turn off the computer. And always we have the temptation. So that it's normal, like this revenge thing, right? But you have to canalize that emotion. So I have to trade and experience. You get that before the overall mistakes and blow too many accounts. So if I trade one trade a day, I'm done for the day. And I have a risk management strategy. So if my account is in break even, like fresh new account, I trade a 0.5%. That is my maximum risk per trade per day. That's my limit. But if my account, let's see for this example, is a $100,000 account. If my account touch the 97.5 in dollars, okay, or percent in drawdown, okay, have like 2.5 drawdown percent, then I trade with a 0.25% of risk of my account.
All right.
Okay. If my account touch the 5% in drawdown, then I only risk a 0.125% of the account. So I have to lose in a row 55 trades in a row to lose my account.
All right. Our community will be really pleased if you could share your strategy with us. Yeah.
Sorry?
The community will be really pleased if you could share this strategy with the community.
Here we go. Can you see the screen?
Yeah, it's visible. Yeah.
Okay. This is a drawdown risk management. If you don't wanna lose a account never in your life again, you have to use this. Only first of all, work in your strategy, your backtesting. But the other step about psychology is risk management. And first, you have to focus on survive to the markets. Don't think about money, have being millionaire in 1 year. That is not possible. Okay, you have to focus on your process, not in money. You have to focus in trading, in the concept, in the game, not in the outcome. Okay, you have to process. You have to focus in your process, not in the outcome. That is a game changer to you. So the drawdown risk management, you have to lose 50 trades in a row to lose your account. And that is the risk management. If you have your 100,000K account in fresh and you only risk a 0.5% per trade per day. You have to lose 5 trades in a row of 0.5% to make this balance. Okay.
All right.
When I touch this balance, maybe a bad streak, right?
Mm-hmm.
That is perfectly normal in trading. Then when I hit this balance, I only trade per day 0.25% per trade per day.
All right.
10 more bullets to shoot and to lose in a row. Okay, it's very important.
Mm-hmm.
These 15 trades in a row, I hit a 5% of drawdown, and the total will count. So when I hit $95,000 in my account, my balance account, I only trade a 0.125% per day per trade to hit the maximum drawdown limit. So I have to lose in a row 40 trades to lose an account. So this is like the really golden sauce is this: to survive and to consistent make profit and have clear your mind and your psychology have nothing to intervene with your trading.
All right. So we talked about your trading strategy today. We talked about your risk management today. What about your trading psychology and these things? So how does that thing work? How do you incorporate all these things? Because you're a trader who trades in the 1 minute, so it must be really hectic for you every day. So how do you manage everything?
Yeah. If you have control with your risk management like this, you take care of your psychology a 70%, because you have the mind clear that you have to lose 50 trades in a row to lose your account. So that is a completely game changer in your psychologist's perspective. The other thing, a little bit more specifically in the psychology, is to think in probabilities. And this is maybe a cliche in the whole marketing community, right? Thinking probabilities, the market are random. You have to trade every single trade that you see, and do not trade. This is really important. Do not trade a trade that you don't see. Maybe you are wondering something, but you don't see nothing. So don't trade. The trade that you don't trade, that is not in your plan, it's a win trade, because I have more bullets to shoot. Okay, so first of all, have a trading plan. And a trading plan is not only your setup, that is part of your trading plan. It's your setup, it's your drawdown risk management, it's your profit risk management, it's your take profit, because every single trade is not about the entry only. It's about your take profit, your exit point. So you can have the perfect entry, like 0 drawdown, but if you don't know and backtest when to exit the trade don't value anything.
Exactly.
So you have to entry, and second, focus on your exit, but constantly, and prove it in back testing. Okay, I show you that I don't use a fixed take profit. In the beginning, that's what I recommended. A fixed take profit, not break even, nothing, win or loss. But now I have my take profit mechanical in the liquidity point to break the structure, downside or upside. Okay, so in psychology, the cliche is think in probability, but it's very hard to think in probability because we are the human being. It doesn't make to be a trader. So what I recommend to my community and my students is to bring a coin in your desk. So when I put a trade, I bring up my coin and I flip it. And that's it. If it's face, right, or head, I win. If it's tail, I lose. So, okay, that's my trade right there. Boom, entry point. And I flip my coin and I tells me myself, this is my trade. Okay, I lose. Turn off the computer and let's go. Okay, I win. So, because that is the key point to think like a profitable trader. It's not a mantra thing. It's a mindset of probability. And to stay grounded, this little thing, a little Bitcoin, it will be a game changer to you. The other thing, to put your perspective and focus in the process and not in the outcome, is I put my balance in the two ways of my coin. If I win, I write the two balance, the final balance, the outcome in profit and in drawdown in the percentage that I risk. So let me put you an example. If I have a 100K account and I starting fresh in the month and I put my trade, I put in a paper, in a notebook, right here, in paper, not in computer, not in cell phone, in paper. I put the two final outcome balance, 99.5K and 100 and $1,500. And when I see that, okay, that it was the two only possible outcome in this trade. So my mind, when I see the balance, is prepared to that two results. So I'm clear in that.
This is something I've never heard before, or this is something really amazing, because when you can actually see what's going to happen after you close this trade, it's already in front of you, you already know the outcome, then there's actually nothing to worry about and you can trade freely. This is actually amazing, really amazing.
Yeah.
All right. So is there anything that you'd like to share with the FundedNext family, like your words to the entire FundedNext family?
Again, have a trading plan, but from A to C in all aspects, and focus only in the process, not in the outcome. The outcome is the result of play correctly and play the game with fundamental and with your trading plan. Focus in the process and not in the outcome. That mindset is the key to success in trading. And if you are recently starting in this game, focus first in survive your account, like this risk management exam, because you are gaining experience in the long term. And when you pass a period of drawdown and you overpass that period, your confidence will be so boost. And when you get in drawdown again, your confidence was clear and boost, because you survived in the past. I can survive now and I can make profit again. So that kind of mindset is a game changer.
All right, very nice. And yeah, thank you for your time, Mr. Christian, and it was really nice talking to you. And we're really hopeful that we're going to disburse you a lot of payouts in the upcoming days. And best of luck to your mentorship group as well. Hopefully, we're going to see a lot of funded traders from there as well. Thank you.
Sure.
Thank you for your time.
Thank you for the opportunity. Have a good
Cheers.
day.
You too.